Hi there, it's Friday night, 7 p.m. in Utah. Big day on Wall Street today. Huge. I'm going to talk really quickly and concisely on the ramifications of what happened today. There's a lot of data, but I want to start with this. Had to get away, went to the gym to work out with my partner Chip. I was over by the cardio area and there was CNBC, a bunch of other channels on, but I looked at CNBC because Cramer was on. Jim Cramer. And yes, Jim was recommending for people to start getting back into stocks, to buy wisely and to start buying stocks again. I disagree tremendously, and I'm going to tell you why right here. Before the markets opened this morning, this is a lot bigger than each day or each week or even each month or even each year. This is something that's a culmination, frankly, of decades, if not centuries, unfolding. I got this from Germany, from a financial contact I have in Germany, Sven, who writes a newsletter before the markets opened. You might know, some of you, that the markets were down 200 like that near the open this morning. Hi. Once again, he speaks German and here's his English. Hi, which is quite good. Hi, we have quite Armageddon in Germany. Deutsche Bank, Commerzbank, big crash today, losing about 10 billion market cap. Here's the news. 1. We had a close down in the interbanking system for 3 hours because the West LB, one of the biggest banks in Germany, tends to be bankrupt. This is a very confidential news I was able to get via my partners in Frankfurt. West LB is invested via hedge funds, private equities, and direct settings into the ABS market. No news about the West LB now, I guess. There's a secret deal between the majors here. I am talking about unlimited credit from Deutsche Bank. 2. EZB flooded over 95 billion euros to the market only yesterday. In fact, it was unlimited offer to any bank without restrictions. Quite a statement. I haven't verified this, but this is interesting. The last time this was 11/09/2001, 9/11. Furthermore, the EZB, which is our central bank owned by the European peoples, is going to flood the banking system with more money if needed. 3. The French BNP Paribas stood right before bankruptcy on Thursday. They lost over 1.3 billion euros with 3 now closed down hedge funds. We have financial Armageddon in Europe. Thank God I wrote to my newsletter subscribers at atkinreview.com on Wednesday in a correct anticipation of what will follow. The world economy is still intact and China needs everything: energy, steel, food, copper, nickel, etc. it can grab. Only our financial system was and still is near to collapse. By the way, what is the Fed doing? Anyway, I emailed them back and talked a little bit about the Fed. Some of you probably know, it's complicated for those of you that aren't into this, but okay. CNN, Wall Street, down but not out. Major gauges cut losses, but still in the day for the red, day 2 as investors weigh Fed's decision, or Fed putting 38 billion infusion in the banking system. Worries remain about tightening credit subprime mortgage market. Okay, the Fed injected money before the market opened in mid-morning, and I guess and then 3 billion towards the end. That's a big deal. If you and your friends were given 38 billion, do you think you could buy some stocks and support the market? Yes. So the market was artificially supported today. And in some of the U.S. articles, it talks about the biggest infusion since 9/11. Was 9/11 a catastrophe? Ask yourself that. One other big thing to put this in perspective, and then I'm going to wrap up this video clip, okay? CNNmoney.com, another nice little tidbit here. Big investors fleeing risk. State Street report, big money investors at 1-year high for risk aversion. London, Reuters, August 10, 8:43 a.m. Out of the many articles I read today, listen to this one. Big money institutional investors have turned more risk averse than at any time since August of last year, taking positions they typically do not reverse quickly. State Street data showed Friday. The U.S. financial services firm said its clients, who keep some 13.04 trillion with it as custodian, have moved into what is called a safety first regime. These people manage and a custodian for $13 trillion. Their people are moving out of stocks, have been moving out of stocks into U.S. Treasuries, which once again they consider riskless. And at this point in time, yeah, it's safe right now. Bottom line, Jim Cramer recommending stocks today is wrong. The little guy, whoever gets back in now will have their head handed to them. You know, Apple was down On news, I agree, but Apple is down like 15, 25 points from its high just a few days ago. Uh, Stocks are really jumping up and down. Even Walmart, of course, Bear Stearns, all these. Don't get back in the stock market, especially if it's anything has to do with housing. You need to get out. Use any strength to get out. If you understand trading, don't use market orders because you'll get wiped out by the traders on the floor. But try to get out at the bid. Don't get back in. Now is not a time to invest in United States stocks or any kind of real estate or any kind of lender. Don't pick them up. There's no bargains now. Get out. Sell. Sell. This isn't panic. This is bottom line, rational behavior, intelligent behavior. Don't get back in. Jim Cramer, I like some of your stuff, but you're dead wrong on having the little guy get back in right now. He needs to stay out. Sure, you might make a gain for a week or two, but you'll get creamed. You will get creamed by Christmas. Don't buy, sell. Sell.